Hey traders, John Howell here. Today, or should I say happy weekend to everyone. Today I want to do something a bit different for you. I want to share with you some of the biggest mistakes that I've actually made over my sort of trading and investing career. And also a message to people that are in their 20s and 30s of how you can make sure that by the time you become into your 40s and your 50s, that you can make sure you're set up for life. And I want to share some things that I think is really important to do as we continue along this journey. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into it. Make sure you click on that very first link in the description, guys, to grab that free trading course there. So one thing I want to talk to you guys about is obviously my journey and some things that I've actually learned about my personal trading career. Is that the very first, I want to split these two things up, okay? So right now we're just looking at a chart here right now, but I want to split these two things up into my trading and then also my investing. And okay, and this is my last 18 years, and if we can start to work on these things, I guarantee you that over the next 10 years, you're going to have such an incredible trading career, okay? So let's actually break this down. I'm looking at Bitcoin right now, but it doesn't really matter. I want to break this down into two different types of segments through here, right? I could have done a really good, actually, let me do this, right? So I want to break this down into two different types of segments through here, right? So the very first one, I want to talk about my trading, okay? Some of the biggest mistakes that I made with my trading through here. Some of the biggest mistakes that I made as a trader, and by the way, guys, in that free trading course, I'm giving a link in the description. The very first video, I've actually got about half an hour video walking through the 13 biggest mistakes that I've actually made. So that goes into a lot more detail from that there, right? So you'll be able to see that. But some of the biggest mistakes I make as a trader, and I see a lot of people doing this mistake right now, is that they're trying to time the market. They're trying to get in and trying to get out, and they're trying to predict what's going to happen tomorrow, and and so on and so forth. And they're trading like that. And one of the hardest things one of the biggest mistakes that most people make is that they overtrade, right? Overtrading is the biggest killer out there. Now, the thing is, here's the thing, okay? Here's the thing. If we know, let's actually remember this here. If we know that overtrading is one of the things, right? So why do we overtrade, right? If we know overtrading is one of the biggest killers that's going to trade, right? Because what do? We're trying to trade every single day, aren't we? We're trying to find where's that next best stock to buy, or the next best short to get into, or the next thing to get into, or what's the stock market to do tomorrow, and how do I trade tomorrow, right? And we're trying to trade a lot. Now, why are we doing that in the first place? And here's one of the biggest things. The thinking of approaching the market is wrong, and it's the very thing that's going to send you down a black hole that sent me, my first 5 years, $250,000 in debt, my very first 5 years trading. And one of the biggest things out there that actually caused me to overtrade was thinking that I needed to, I don't have a lot of money to my name. I only got a few $1,000s in my account. So therefore I need to trade a lot to make a lot of money, right? And so therefore I'm looking to trade every single day. And what ends up happening, right? What ends up happening is that we make a lot of mistakes. We get very emotional, and then we end up going down this big, massive rabbit hole and then we end up blowing ourselves up, right? Again, I'm talking with you here. So when it comes to your trading out there, we always think, I need to do this. Now, here's the thing, right? Here's the thing. This is one of the biggest things that actually changed my trading career for the better. Understanding this one dynamic. Now, here's the thing. Do you know you're only 7 doubles away, starting with $1,000 to $100,000? 7 doubles away. Now, what I mean by double is 100% return. Can you do that? Yeah. Like if you get a really good trade going, right? If you get a really good trade, 100% return is not that big of a move using options, or 100% return using such as things like futures trading, the Nasdaq, the S&P 500, like that sort of stuff, right? Is actually not that big. We're not talking about a massive move here, right? It's not that big a move to get a double. So understand this sort of template here is that you're only 7 doubles away from getting that. Now, I'm not implying that you're going to make 100% return on every single trade, right? And I'm not implying that you're not going to have any losses. No, you're going to have them in there, right? But I'm trying to get you to understand the template of this is that we don't need 500 trades to potentially turn that few $1,000 trading account into 6 figures, right? Because that's the thing. What? That is the thinking we have. That is the thing that slows us down and causes us to go backwards. Makes sense? So when we are doing this, right? When we're doing this, the biggest thing for me was I can see this here. So then my job was I need to be trading not a lot, but I need to be like a sniper approach. I need to be finding those trades that potentially is going to give me a double. Now, when I say potentially, some of them are going to be losses. We just understand that. And some of them are going to be small profits, right? So like this week here, I got into a trade. It could have been a double, but it was only a 20% profit, right? That's the nature of the beast. But I'm looking for trades that potentially is going to give me the double. And I'm not looking to trade a lot because I don't need a lot, right? Over the next 12 months, I could only have 15, 20 trades and still potentially get a 6-figure return over 15, 20 really good trades throughout the next 12 months than someone trying to trade 20 times a month. Because I promise you, the trader that's trading 20 times a month, they're going to blow themselves up. So my job was, now I understand that I need to be patient and then wait for those kind of setups. That's going to give me a really high win-loss ratio and the potential of making a double on the trade. And when I understood that, makings of that, I understood now how successful trading is actually really done. Successful trading is not done like a job, right? We go to the job, we turn up, we work 8 hours, we go home, okay, I made money today. If you go to the market and you start to trade every single day because that's what you've been programmed to do, the market's going to chew you up and spit you out, right? So the best thing to do when it comes to that is start to really understand and the dynamics of really understanding this here, right? And so again, you could have 10 amazing quality trades this next 12 months and have a small trading account, and by the end of the 12 months have a potential of having maybe a 6 or maybe even a multiple 6-figure, year. What is the key there? The key is your ability to be able to identify those really good quality setups and then also being patient for those setups, because you may not see a really good, one of those really good high quality setups for a whole month. And then the next month you might get 3 really good setups. And then the next month you might get 2. And the next month, you see what I'm saying there, right? So that's your ability to be able to, one, understand what goes into a good trade. And then also, secondly, the nature of being able to be emotionally controlled and not to trade every day. And even if you haven't a trade for a whole month, say that's okay. There's no need for me to take a trade today. Makes sense? So that's the biggest thing that actually helped me turn around when it comes to my trading career. And again, in that trading course there, guy, in the free trading course I'm giving away, I'm teaching you my number 1 trading system that I'm using for that. Okay. So I want to talk to you about now one of the biggest mistakes that I've made when it comes to my investing. And one of the biggest mistakes that I've made the trading is more about pattern recognition, finding really high quality times, trading, so on and so forth, right? So we have this here. We have that trading approach. That's what trading is all about. Trading is all about. Now, investing is a completely different level of thinking. Please don't mix them up. If you say, oh my goodness, the stock market's going to crash because inflation's high, well, that's a view overall, right? Because the market does this, doesn't it? That's a view overall. So you can't say, oh, the stock market's going to crash because there was a high inflation number, and then expect it to drop the very next day. That's not how investing works, right? Investing works overall. So here's what I do say when it comes to your investing, okay? A really, really, really simple guide to your investing is, 1, do not be trying to pick bottoms and trying to time the markets. That's the very first thing I do say. Because you could get into a position and it goes against you 5 or 10% or 15% or 20%. You shouldn't be worried about that. Your goal is not to be worried about what's happening now, but your goal is, okay, by the next 5 years, the next 10 years, this is likely to happen. And when it does happen, I'm going to be in it and benefiting from it. Whatever happens for the next maybe 1 or 2 years, I don't know. But I really believe over the next 5 to 10 years, this is going to happen. And so whatever happens in the next few years, I don't really care. But as long as I'm actually in it when it does happen, then we can actually start to do really well, right? It's like people who invested into Bitcoin. I'll use the analogy of Bitcoin, right? People that invested with Bitcoin back here, right? This is 3 years. People get so, right? Look at this here. people who had that analogy from here, like from 2018 through to 2021, right? 1, 2, 3 years. Where people had 3 years of this. They were what? They were saying, okay, then I'm seeing Bitcoin's going to have a big mover again. So they may have bought it here. They may have bought it here. They may have bought it up here. They may have bought some here. And they did that, and maybe they averaged in as time went on because they were really confident that they're going to see something like this again. And when it does go up like that, no, you might not have got the top. But if you got in at, say, 8,000 and then the thing went up to, say, 60,000 or 50,000 up here, right? You'd be a happy camper with that, right? That's almost a 500% return. Do you see what I'm saying there? So the whole idea is investing is that, okay, this is likely to happen over the next 5 to 10 years. And I don't know when it's going to happen. It could happen next year. It could happen 5 years from now. I don't know. But when it does happen, I want to make sure I'm in it when it does happen, right? So I'm no longer timing that position. Now, this also requires some common sense, all right? And then also some forward looking based off past history. Here's the thing. Common sense. Common sense simply says this, is that common sense simply says that everything goes in cycles, doesn't it, right? Everything goes up, then it goes down, then it flattens out a bit, then it goes up, goes back down, flattens out a bit, right? This is just basically the cycle. This is what everything does. Stock markets, property markets, everything, right? Just look at the stock market. We went through a big boom, go through a big bust, so on and so forth, right? Same with the crypto market. This is the crypto market here. Went through a big boom, went through a big bust, quiet, big boom, big bust. Now it's gone through another. You get what I'm trying to say there, right? So the best thing to do is that if we understand that from a cycle perspective on all markets, then if a market has already done this and it's going through this here, well, that's probably not a good market to get in, right? But if a market has gone through this and now we're going through this for a few years, well, then we know this is probably going to happen over the next 5 to 10 years. We don't know when though, right? So if a market's already gone down and we're going sideways for a while, right? And for you guys that know exactly what I'm talking about here, you know what market I'm talking about here, right? Is that, and then the market's gone sideways, we know we're going to get another boom, right? So if we just look at this from a decade perspective, what's been really hot for the last couple of decades, for the last 10 years, is not going to be hot for the next 10 years. That's just simple cycle analysis, right? But what hasn't been hot for the last 10 years is probably going to be hot for the next 10 years. Again, common sense, just looking at cycle analysis, how history has worked. And so, and that's the reason why, guys, if we look at the main sectors that haven't done this boom and bust cycles for the last 10 years, what has that been? Metals, and especially the mining sector, in particular gold mining stocks, right? That's where, like, for me personally, if I'm looking at this, I really do see over the next 5 to 10 years, and I say over the next 5 to 10 years, guys, is because the bull market might be starting right now in the mining sector. I don't know. I'm in it, but I'm in it. So when it does create the next big Bitcoin bubble, the next Bitcoin move, guess what? I'm already positioned for when it does happen. It could be starting right now. I don't know. Or it may have another big leg down soon, and then suddenly on 2024 or 2025, we start the big move up. I don't know. But I'm really confident in seeing that with the mining sector, only because it's just common sense of simple mining, simple flows of, simple cycle analysis, right? When it's like, if you think about the mining stocks, so I think about this, the mining stocks have been crushed and have done nothing for the last probably 10 years. It's not like we're never going to ever going through a mining boom again, right? That doesn't make sense, right? We are going to go through another mining boom again, and it's going to happen. We don't know when. So from an investing point of view, we say, okay, I'm in it, and this money's disappeared now for the next 10 years. But when we go through the next mining boom, which we will, I'm going to be in it and I'm going to ride it. I'm going to make a lot of money. So it's not a matter of if I'm going to make a lot of money. It's a matter of when. So for me, doing options trading and stuff like that when it comes to this here is very risky. That's where you want to just simply be buying markets and letting them go from that there. So that's the number one thing when it comes to investing is common sense. What didn't do really well for the last 10 years is probably going to do really well for the next 10 years, right? Et cetera, et cetera, et cetera, et cetera. And then the next thing is that, look, having a forward thinking based off past history. everything in what we're going through right now, everything we're going through right now has happened in our lifetimes, right? Like especially with inflation. What's likely to happen with the inflation in the next 10 years? Just go look back at the 70s and we're probably going to have something really similar to that. Nothing ever changes, right? We went through a big, massive inflation spike. Now the inflation's coming down and then we're going to go through the recession and then they're probably going to come back out and cause something to create this spike of inflation again. It's, you can see what's likely to happen. So then what you want to do is you want to go back to those times where we were going through those inflationary times and what were the asset prices that did the best in those times. Right? I think it was back in the 40s as well too. I think it was the 40s we had inflation. Actually, let me just double check this here right now. Australia, United States inflation rate. So let me bring this up to here, right? Because I think this is really important to understand. And this is, again, guys, just right. Same things happen again and again and again. If we could just, the further we can look back in the past, the more we can look forward, the better we can make decisions based on our investing. Now, guys, I do both, right? I take a portion of my funds and putting into an investing position, like I'm talking right now, letting it go for the next 5-10 years, because I don't know when that boom's going to happen, right? Now, a bit of a side note, I also believe cryptocurrencies are going to be an incredible investment over the next few years as we're going through this next washing out period. Because by the time 2030 comes around and 2040 comes around, the crypto market is going to be huge. Just like the internet boom and bust back in the 2000s. Internet boom, 1990. Internet crash, 2000, 2001, 2002, 2003. Right? But then guess what happened? 20 years later, it's become a major part of our life. So I think cryptocurrencies are also going to be part of that cycle. But not yet, right? Not yet. Cryptocurrencies, I believe, still has another few years of washing out effect. But if I look at this inflationary, and I zoom in here, it was, the 1940s, right? So you can see similar things happen. The last two times we've had inflationary problems was the 40s. We had a big inflationary spike, then we had a crash. Then we had an inflationary bigger spike, and then we had a crash. Then we go into what? Then we go into the 70s. The 70s was what? A big inflationary spike, then a crash. A next big inflationary spike, which actually was bigger than the one before that, and then the crash. So the question you have to ask, if by looking at this here, or even just going back to the simple 70s, what were the asset prices? If you bought something at the start of 1970 and sold it at 1980, what were the asset prices that did the best through this boom and bust cycle of history? Because if we look at this here, right, we can see that the last two times, the last pretty much 100 years, we've had inflationary problems. We've had a double whip in the markets, right? A double whip where we actually had a move up, a move down, and then a bigger spike up, and then another big move down. So that means we're coming down through here, and something's going to cause this inflationary spike, probably QE printing, that's going to cause that to happen, and then we're going to go through even a bigger crisis, right? Because guess what? The second wave of inflation is bigger than the one prior to that. It's the same thing over and over again, guys. Like nothing's different. The question is, what were the asset prices that did the best here? And the asset prices, if you actually look at that, were actually the metals. Gold and silver went bonkers. Like we're talking like 600-700%, sometimes up to 1,000% move in those markets there. Now, maybe gold has already started to see this happen. That's the reason why we're getting a move in gold right now. Again, I'm in gold, right? I don't know when gold's going to make that move, but for this reason, there's a high probability that we're probably going to get the exact same thing the last two times we had inflationary problems. We're probably going to get it again. And if so, gold is probably going to be the big thing. Now, the big thing about gold is gold has been the unloved child compared to cryptocurrencies. Gold's actually looking pretty good right now, right? It's like, oh, those people that, oh, crypto. No, right? And it's the very reason why the last couple of years I've been saying no to crypto. And it's the very reason why I've been saying yes to gold. If you guys have been watching me for the last few years, you know that I've been saying don't touch the crypto market. You want to buy something, buy gold. Gold, you might be down maybe 5% if you bought it at the highs with gold. Cryptos, you're down, sometimes you've lost the entire lot, right? So you get what I'm trying to say here. So trading is all about pattern recognition, and I do that every single day. I'm looking for my patterns, because I know it's not going to take a lot of trades for me to generate a really good income, right? It's not going to take, it's not going to, you know, if you're starting with a small trading account, if you're very disciplined and patient, you can grow that. But that's the working involved with the trading is, one, understanding what goes into a good setup, and then two, being able to be patient. That's the working of that. Then the investing side of thing is understanding simple cycle analysis. What's done really bad for the last 10 years is probably going to do really well for the next 10 years. It's pretty simple out there. But then also understanding where we're going moving forward for the next 10 years based off history at current times. And I've just shared this with you. And so that's the reason why, guys, I think the metals right now, the metals and the mining sector this decade is going to be the outlier and the absolute screaming winner when it comes to investing out there.